Good afternoon, traders across the globe at all levels. This is Jeff Killian for the Vector Traders Consortium, vtctraders.com. And today's demonstration is on yesterday's action after the market opened up, traded up, went into program trading, and then finally went short. The proxy for the analysis today, the technical analysis that we're going to cover, is on the Dow E-mini futures, near contract month 1221. Again, that's YM 1221. And the subgraphs below the 1 minute price action is the stochastics momentum index and the volume numbers for every closed out 1 minute bar. So in reading price action, a true professional should learn how to properly put the action in its proper context, so to speak, to understand when and where they have any real business trading or not. In higher volatility circumstances, trading patterns, okay, it is more difficult because the range of the bars become greater and the stops are wider. And therefore, where the stops become wider, there is a higher account needed in order to trade that action. So logically, we're looking for low volatility meaning a measure of variability, in order to take advantage of the breaks in the levels, whether we want to go short or long, in a high probability chart pattern analysis environment in isolation. Now, here, if we look at, for example, some of the overnight session volume here, okay, this is a series of up-down moves that has larger bars here, for example, larger bars here, mixed action here, some program trading here, and then we have lower volatility that takes place right about here on this up move. You can clearly see at this point, now that you know what to look for, that this stands out. So when the move takes off to the upside and the possibility of it turns back around, well, then we have more business trading short in this case to make more money in a short period of time than we did or might have had before. Okay, here's lower volatility here. We're getting in close to open equity session at 720. Closer, the volume picks up. And here we have it again. Lower volatility, lower volatility. Okay, then prices trade up, and they stop and start to move sideways here at this point. And then eventually, okay, the market is going to open and the prices trade up sharply. This completely dwarfs everything that we've seen so far. And rightfully so, it should, because it's the open equity session at 9:30 a.m. Eastern. And what immediately happens is program trading. This is exactly what you do not want to trade. You do not want to get involved in this. This is something you can't touch until program trading is over, until you're out of it and you're sure you're out of it, and then you have any real business trading short or long. Prices continue to move, and we're still in program, and we need to get out of it. Now, the bias on our end was to go short on market opening, and that didn't happen. But the bias remained short up until the opportunity took place to trade short, and the market was either going to follow through or not. And that time was 10:20 a.m. Eastern Standard. Now, where do we want our price profit targets laid out? Most traders have an idea about how to get in and where to get in, but they don't really have any clue about how to get out and lock in a profit before they have a chance to give any money back. So let's take a look at this here. I have taken the liberty of laying out some lower levels to the downside. And here we're using our proprietary VTC line labels indicator. When it is below prices, it's support. When it's above, it immediately turns into resistance. So there's no need to change any of that. Now, these are the most closest levels. These are the closest levels associated with the break, as you can see, identified by base formation lows or pivot point lows, right? Base formation here at this point. These levels are drawn from way back over here. So you're going to need to go back as far as you need to go back in order to find all these levels in case the market sells off sharply, so that you can take advantage of that and be able to lock in the most amount of profit, right, in the least amount of time. Now, as you can see, the prices then broke at 10:20, and the original price profit target is hit almost immediately. Now look at the price action here. The uniformity, this is the key, traders. There is no downside resistance at all when we look at the price chart pattern in isolation, the action itself, until you get to possibly here. But look at the volume that's in the open equity session as compared to the overnight session. There's nothing. If the market's going to sell off strongly, that should stop these prices from falling. Maybe teeter some, but not stop. A new person would want to get out possibly here, or even at the next level to lock in a profit. A professional may take 2 or 3 legs out of an extended move to the downside. So there we are, non-stop, all the way down to here would have been a great place to get out for a new person. And then the prices continue to trade to the downside, right? All the way down to here before they stopped, where a lot of volume came in to halt the prices, and then things start to move to the upside as the SMI kicks up, and a lot of the real-time money flow, institutional custom indicators that we have here clearly said that's it. I would not recommend that any new trader, even I would say 5-6 years in, would want to trade much longer than this level down here. And the only reason is because too many things can happen. The longer your hold time is, the more opportunity there is for the market to go against you. So here's the key. Get in at exactly the right time. When you're out of program trading, look for the price profit targets to the downside to get out on a rally, and get out at exactly that time in order to lock in a profit, as a true, highly trained professional knows how to do. This is Jeff Killian again for the Vector Traders Consortium. It's been my pleasure to present to the world once again, and we look forward to producing quite a few new videos in the near future. For any questions about our mentorship programs, you can contact us through the website at vtctraders.com. Be careful out there.